Excellent. So again, good evening, everyone. My name is Samir Sotur. I'm the Regional Director for Founder Institute. I'm joined by Walid Al-Bashir, Co-Director at Founder Institute GCC. We have a fantastic panel today. We have Media Nocentini. She's a Senior Partner at Global Ventures. We have Amit Grover, Impact Partner and a venture, a venture capitalist at Grover Impact Ventures. And we have Derek Watson. Derek is the founder and CEO at N2 Technology Limited. So we will be launching a short presentation to tell you about Founder Institute and its impact in the GCC and give you a little bit overall story about us. So as I launch it, just allow me. And if you have any questions, feel free to type them in the Q&A box. So we can take those questions post our discussion with the panelists. So thank you for your patience. And here you go. So Founder Institute started actually in 2009 in Palo Alto, California. And since then, they have been in business. Initially launched their first Silicon Valley accelerator where a company called Udemy, who we recently IPO'd, came in. In the GCC, we launched right during the pandemic. And our event today is actually, we're starting our fall cohort. And this is our first event to kind of, invite people to join our fall cohort, right? So our topic today is a very interesting topic covered by some of the leading venture capitalists and impact partners in the GCC region. And so we're mastering startup funding strategies for raising capital in the GCC. As Founder Institute, we're present over 100 plus countries, 200 cities globally, and we have a lot of community. The agenda is pretty simple. We're gonna do a quick welcome, which we did already. We're gonna quickly show you what FI is. All the speakers, panelists are going to introduce themselves. We're gonna have a panel discussion on some of the key challenges, key points today, and we have a networking session on AirMeet. So here is the link. If you all can just pause for 10, 15 seconds, take this link. I'll also be pasting this link as we go along the panel. So figcc.co/GCC funding will redirect you to AirMeet. After our session, we will join this like a table structure, a round table where we can kind of go ask questions, pitch your ideas, etc. We'll run that for 30 minutes. Founder Institute is the largest company creator in the world. We're 6,800 alumni in the last 12 years. We have been in operation, $30 billion portfolio value, 35K mentors across the world, and 1.75 billion has been raised from investors so far. We're present in 100 plus countries, and we have a large investor pool. And I'll be showing you how, as a founder, when you come to Founder Institute, you transition from a founder to actually accessing our network of investors. So our regional footprint has also been very strong. We started our first cohort September 2020, right in the pandemic. We have 40 plus alumni in the last 2.5 or so years, who have raised almost $2+ million. Total portfolio valuation is about 50 million. We have founders from various countries, not just GCC, but across the world. 250 plus very strong mentors and advisors in our network here in the GCC. And also we are building a very strong angel and institutional network of investors. My name is Samir. I'm the regional director. I launched Founder Institute and joined by a fantastic team today, who you will see as we go along in the program. Some of you might join the program. Hanan is based in Doha. Carmen is based here, Dubai. Ayhan is also the head of global growth for Founder Institute headquarters. And Walid, who's also joined us, he's co-director assisting with me, running the cohorts. Walid is also a graduate of VC Lab, who's launched his venture capital fund from Founder Institute. So we know all the world is broken, is severe, problems, COVID and poverty and war and famine and everything else. So we're building Founder Institute to impact, and we really are wanting to work with people like you to build technology companies who can create larger impact. And we're all about actually following the UN SDG paradigm, right? Um, we have also built a very strong progress planner. So if you go to fi.co/progress, you can actually build your company based on a for progress, a UN SDG based framework where it'll actually roll down on how and which SDG your startup complies to, and how you can actually solve some of the challenging problems facing the society today. We are the largest company creator, and now since 2020, Founder Institute also launched a VC accelerator called VC Lab, and have launched more than 300 plus VC funds. So we are both these are programs run under different umbrellas and brands. And so they are independent. And now we form something called as FI Venture Network, which is the accelerator lab is actually helping people like me to build communities. The Founder Institute and the Founder Lab is actually helping startups and founders to come. And VC Lab is all about funding to launch new funds. This is our network. And when you come into Founder Institute, you graduate from Founder Institute, you graduate into Founder Lab, and you access the FI Venture Network. That's your progression as a founder into our ecosystem. VC Lab is pretty impressive. As you can see, this is the latest snapshot captured from the VC Lab website. We've completed 9 cohorts. I think it's more, it's 11 cohorts actually. It's a little bit outdated data, but 324 plus firms, and it's growing immensely. Some great alumni into space, into NDAtics. I recently met with this medical robot company in San Francisco. Genomics, quantum computing, robotics, you name it, we have those alumni into our portfolio. So without further ado, and I want to spend more time with the panelists and also give you a lot of good insights from the panelists. I'm handing over the introductions to the introductions. But before moving there, in just 30 seconds, just wanted to announce we're launching our fall cohort. The early deadline is 30th July. Final deadline is 27th August. Program begins on September 5. So if you're an early stage founder, definitely this is a great program for you to form a company via a structured route. Again, just a quick repetition of the Airmeet networking link, which we will also post again in the chat. And yeah, so let's go to the panelists. I'm gonna stop sharing so that you can actually see the full screen of the panelists. Okay, great. Okay, brilliant. So let's start with the panelists. Let's start with Media. So Media, let's start with your introduction. If you can, share your journey as a VC and who you represent right now.
Absolutely. Thank you so much, Samir, and everybody for this opportunity. It's always great to support the community. So I'm senior partner at Global Ventures. We are a VC firm focusing on the MEA region, but with LPs that come from all over the world. We are at our third fund. We have about 60 portfolio companies at the moment. We screen more than 6,000, so it's fairly selective. And it's incredible founders that are really changing the way we look at certain sectors. So super exciting time. And I'm also the founder of a company called C3, Companies Creating Change, that runs programs similar to the Founder Institutes, but more focused on the impact and governance side. And so after you do the program with the Founder Institute, we can definitely support you further before you go for your investor fundraise. Very happy to be here. And yeah, I guess that's enough as an introduction.
Thank you, Media. May I go to Amit for a quick introduction? Let's combine impact and impact together. So Amit, your introduction, please. Thank you.
Sure, thanks, Samir. Look, I'm a serial entrepreneur. I run many businesses. I run an advisory practice in 6 countries with 600 colleagues. I have a very large real estate company that I founded in 2010 that does a lot of work in student housing in Australia and New Zealand. And I am involved in 3 impact funds, not venture capital funds. They run something of a hybrid model between a sovereign wealth fund and a holding company with over 15 years of focus on impact. So we run a fund in Europe, Singapore, and the Middle East, and the subjects are financial inclusion, climate tech, and food security. So that's me. Yeah.
Brilliant, thank you. And Derek, also would like a quick introduction. Your company N2 is very interesting too. I think a lot of early stage founders access N2 in the region. So your introduction, please.
Yeah, so I'm ex financial markets, started my career as a prop trader at a large American bank, moved on from there, ran my own hedge fund. It was a $500 million convertible arbitrage fund. And that's really where I sort of transcended from public markets into private markets as building a lot of technology ourselves, but also started investing. So when after the financial crisis, when I sold the public market side of the business, I kept the private market side of the business and got involved in sort of all the facets that come with that. And one of those obviously being raising capital as a startup. So I lived in this sort of frustrating world of once I ventured into it and realizing how difficult it was, to come to the conclusion that the way to actually do this, or a better way to do it, is let's get serendipity out of the way, and let's match investors with startups based on what we do know. So the objective sides of that, and that's what the N2 platform does. We vet every investor on there. We've got over 830 investors that deal source through us, all with verified investment preferences inbuilt, and it just speeds the process up, and it speeds it up to a degree where we've had a Singaporean lady that was raising a Series A on a medtech platform, and she was on the phone under an hour with Robert Bosch Ventures in Germany. So that's our sort of proof that we can get stuff.
So it's global. N2 is a global platform.
Very global, yeah.
Very global. Fantastic. Walid, if you are still around, can we request your introduction, please, Walid? Okay, maybe he's transitioning from car to home, so kind of let's let's kind of quickly look at, you know, all the entrepreneurs in this market call a common term called, you know, funding is a challenge, the markets are not relevant. You know, Medya, let's start with you. You've been both on the you really as a startup founder, because you run an impact company as well as a institutional VC. So from your side, what is the current landscape actually? If you can share some information on current landscape.
So in terms of capital available, it's improving in the region compared to where we were 10 or 5 years ago. You know, we went from a $250 million invested in MENA, not only in GCC. We need to stretch a bit to get some numbers that make us feel comfortable with the ecosystem. So we started from there, and then in a few years we reached 2 billion plus. So for sure, the picture is improving for founders, for us as independent VCs, and in general. There are many initiatives from the governments, from semi-governments and corporates that are fostering the ecosystem. So it's a much prettier picture than a few years ago. Of course, this year with the contraction of valuations, mainly in Europe and the US, here we never saw the bubble fully. So I guess it's a little less of a contraction, but still it's not easy time to fundraise like always, but it's still better than a few years ago. And I'm positive because I see a lot of momentum from also international investors that are looking at the Middle East and Africa, as well as the global South frontier markets with interest, where a few years ago it was not the case. So we are proving for the globe, that we can have exit here, that we can have successful companies, that again, despite the fragmentation of the region, there are a lot of opportunities to scale, mainly B2B, mainly asset light, but still it's super exciting. So I would say it's still a green field. We're still scratching the surface, but it's getting.
And you're looking at, and your global ventures itself, they're looking at founders at stage and above, right?
So we typically, we invest in Series A plus or minus, depending on the sector. We're sector agnostic, but the timing is important for us. So at the moment, we are super excited about supply chain, energy, and agri-tech, but we're agnostic, so we look at every sector, Series A.
Brilliant.
And we love B2B softwares.
Lovely. Amit, you have a very unique experience from Australia, New Zealand into Dubai. How, like, given the current market scenario, you know, I'd like you to draw a little bit parallel between the GCC MENA markets versus the Australia, New Zealand market.
Look, I mean, as far as Australia and New Zealand market is concerned, it's a very mature market. I mean, the VC landscape has been there for decades. And obviously, it's unfair to compare the both because MENA, like, you know, Medya just said, that it's still a very greenfield opportunity. I mean, 2 billion is nothing when you talk about a VC landscape compared to Australia and New Zealand. That's probably inching across 300-400 billion. So I think, you know, from that perspective, I think MENA has kind of come a long way from where it was. But I'm going to talk about the current situation, Samir. That's very relevant to everybody. It is an extremely tough situation. I don't mince my words. You know, it is getting very, very hard to raise money. And look, you can't really look at money in isolation. A lot of that money is flowing from the US and Europe. Main sources of that money come from Russia, Ukraine, UK, and a lot now coming from India. And I think everybody seems to have a conservative view on the startup ecosystem and how much punt they want to take, given how valuations are dropping, given how companies are not meeting their forecast. I mean, there was a party going on in 2020, 2021, and early 2022. Now that party has come to an end. So there's going to be a lot of sifting going on of ventures outside. So I think it's quite a tough environment for me, to be blatantly honest.
And do you think there are going to be any changes going into fourth quarter or next year?
I don't see much changes, in my opinion, in the fourth quarter so much. But yes, I think there are signals of recovery economically. I think the US has got to come out. I mean, that's where the global stimulus, all the buck stops there. I think once US starts getting a little optimistic with some of the policies the government is now working on, especially with the debt interest rates and things like that, I think, you know, by next year, early quarters, I think things will start looking a bit brighter.
Excellent. Thank you. Derek, you have such a huge pool of 800 plus investors, and equally important, there are startups accessing your platform. What's the capital flows you're seeing? Which regions, which investors are coming to your platform? And what's the current landscape? Where is the investment going into early stage deals, or is it going into late stage, or on your platform specifically?
Yeah, it's been an interesting, I'd say, 18 months. So, you know, since the beginning of 2022, when we saw a bit of a recovery, a lot of interest, a lot of interactions going on, and then sort of, you know, the doom and gloom kind of hit, and we realized there was a lot of inflation and things weren't quite as rosy, and there was a big drop off. You know, what we do tend to see is sort of the trends coming through very quickly on the platform, because investors will go in, and we saw that sort of massive interest in Web3, everybody clicking, I want to see anything Web3. And at the beginning of this year, it was everybody clicking, I want to see everything AI. And it all started off again with this huge enthusiasm, which then SVB went under and everything sort of slowed down again. So you kind of really see and feel these trends. But I think the most interesting thing that we see continuing on the platform is that the seed investment arena hasn't changed. The valuations, yes, they have come down, but in terms of interactions at that level, the focus keeps on changing. Absolutely. I mean, you know, you have sort of three types of VCs out there. You have all good capital. I don't want to shoot anybody here. But you have the real sort of, adventure capitalists, the venture capitalists, and then you have, the sheep. I can't think of a nicer way of putting it, but you can. And they make money and all that is necessary. And what you see is those sort of trends flipping around an awful lot more. And I think the volatility that we're seeing in what people are interested in is more due to the uncertainty. And that's really what we're feeling. But in terms of seed interest, it's still pretty much as large as ever, maybe just for comparative analysis more than anything else.
Waleed, welcome. I hope you had a safe transition to your office, right? So Waleed has a very different, he's worked with different family holdings, as well as was very fortunate to work with Waleed some time ago, and he's now graduated from VC Lab about a year ago, and also has his fund incorporated. And he's looking at a lot of African-based companies, as well as some of the funding coming there. So Waleed, why don't you quickly share your experience and about the GCC market, what Intuitive Ventures is seeing, and maybe give a little bit of comparison between what's happening in Africa and the GCC, Middle East, North Africa, right?
Great. Hi guys. My name is Waleed Al-Bashir. I've been in technology for like 28 years right now, and I'm multi-time founders. I founded about 6 companies between 2004 and 2018. I've been in the region long enough to see the ecosystem shaping. I mean, like by 2004, 2005, when we were around here, there were hardly anything that's called ecosystem, So if you're trying to innovate in technology, then you're pretty much hitting on the bushes, not getting any sort of support or stuff like that. And then from 2011, I think, or 2010, Samir, you remember when Startup Weekend started to be organized, and I think you have been involved in the first batch of organizations. And then after that, Ternate, the CVC, and the ecosystem and stuff. And I remember Dave McClure coming over and over, and then explaining about how to form an ecosystem and how it takes to get 1,000 startup down the line. I think fast forward as of today, we see Dubai has managed to position, or UAE in general, has managed to position itself as a global, city in terms of startup venture capital. Although the technology production in the region is still, it has its own challenges. That's why we see a lot of founders that are moving from East Europe, the founders moving from Far East and from Africa. And I think during me handling the community for the Ternate and during the time between 2013, I think, and 2015, that was the first wave to get, founders from East Europe or from West Africa or from other places. And we see this is happening most common. But again, there are a couple of challenges regarding the technology production, and there are also a couple of challenges regarding the market. So most of the founders, they come here, they brand, they position, and they look towards Central Asia or Africa, as the market is much bigger over there. But I think a lot of government programs, like like the Golden Visa or the Digital Economy Program to attract 100,000 like programmers, has helped to accelerate the production of the technology in the region. I mean, this is my views. In Africa, still we see ecosystem is not developed well. We have a station in East Africa. But again, the burn rate, the talent pool is much available. Burn rate is much lower. You see a lot of startups at early stage, which are running below $10,000 a month, up to 30 staff members I've seen. And I think the combination, or what I see, a corridor between UAE and Africa and a couple of African countries, especially East Africa, could complement a lot of offering in terms of that.
And our investor mindsets also changing. Are they specifically looking at certain, maybe we should go to media. have you looked at different preferences of investors? Have like you also, Global Ventures does a lot of co-investing, right? So have you looked at different deals in terms of how the mindsets of investors have changed?
We have a few. Sorry, go ahead.
No,
sorry,
it was
go ahead.
for me.
Go ahead, the media.
Okay, I just wanted to say, yes, we invested a few times in Sub-Saharan Africa. We have 6 companies in Nigeria, 1 in Kenya, 1 in Tanzania, a couple in Rwanda, and more than 10 in Egypt. They are all, just echoing Walid, they are all starting from one country, then expanding in adjacent countries, and then there is these movements between Sub-Saharan Africa and UAE, Saudi, or Egypt, Nigeria, and then the Gulf, or the Gulf and then Egypt, and as well as Pakistan. So we see, for example, one of our portfolio companies, Ilium Health, in the health tech space, they were the first Sub-Saharan African company to make an acquisition in the Gulf. They bought a company from Qatar to expand here, and now they're present in the Gulf as well. So absolutely, Walid is
so the change is happening between investors as well, right? Their investors are also looking at a diverse portfolio to kind of not only specific founders, some specific ethnicity, but they're going beyond geography also to invest, right?
Of course, so there is a health of incredible founders all over the region and beyond. And again, now tech is available for much cheaper than 10 or 20 years ago. And so the fact that we have 60% of the population below 30-year-old and growing, it's an incredible opportunities and a lot of challenges to solve. So again, incredible startup opportunities.
Any specific highlight, Derek, from platform perspective, in change in terms of investor mindset, because you have a global investor pool. So are they looking at specific MENA-based, GCC-based, Europe-based, and are they also looking at opportunities to co-invest? I mean, using your platform?
Yeah, I mean, there's a couple of things just to add on to the Africa story, because I'm like uber excited about it myself. And just the difference because of the cost base, et cetera, et cetera. I've been on with some very early. We've partnered with quite a few groups over there, by the way, and that's sort of how we get the deal flow onto the platform. And we've got a whole bunch of partners that look into Africa as well. And that's become much easier to onboard. Finding investors that want to look into Africa has been pretty easy, actually. But just the numbers over there absolutely blow my mind. And coming from London, obviously, you know, between Nigeria and London, there's just a straight line between people going back and forth continually, whether that be for education, whether that be for family. But I've been on some of the startup pitch days, and the numbers absolutely blow me away. People, you know, guys coming out and saying, you know, we beta tested, we opened a month ago, and we have 15,000 users. Wow. I mean, it's just a completely different mindset. And I think what's super exciting about it, and this sort of opening of technology to everyone, is now you've got people on the ground that live the problem. They're solving this for their mum, they're solving it for their aunt. We haven't got kids sitting, you know, on the west coast of the US guessing what people need. There are actually people there that have the ability to do it. And for me, same with Pakistan, it absolutely blows my mind. It's really what technology can do and solve. And that's super exciting.
Is it also changing investors' preferences, the mindset 100%, of investors?
100%.
Okay, so they're more looking at Pakistan, African founders who now are moving back to Africa and kind of starting some companies, as you rightly said. They're kind of solving for their own family first, and then for the bigger society.
They live the problem, right? So they know what the hell they're doing, and technology was unavailable to them to solve it. But now that technology is available, and you know, the globalization of the world, you have I think they call the Pakistani population that moved to Europe or to the US, they call them Westernis, and they're all moving back. They're taking their wealth and knowledge with them.
Okay.
And it's absolutely fabulous to see, because, you know, they have a very different mindset than, you know, me being a sort of white European. They have a very different mindset, and it's so endearing and so powerful. They want to go home and they want to look after their home nation. They want to build wealth. They want to build a better environment there. And that's coming through.
I was actually on a call this morning with a Tanzanian founder, female founder, just 26 or 27, and only by grants she had raised, and she gave me a breakdown of grants, about $1 million only in grants in Africa. And she gave me the names of programs, all USAID and DEP or whatever. And she said, the most sources of funding available in grants. Amit, because you run impact funds, and have you come across these government grants? And are there some government grants available in our region? And how can founders apply? Or what's the way to discover these grants or any other equity-free programs?
Well, let me kind of, start by explaining investor classes. Now, you've got institutional capital at one end, and then you've got private capital on the other end, which is high net worth individuals and things like that. In terms of the investor mindset, Samir, much hasn't changed really. When you look at the numbers, a large proportion of institutional capital as well as personal capital are still pretty much hedged on tangible assets. You've got the real estate. So when you talk about the MENA region, especially talk about the UAE, I mean, real estate is number one. It's trumping everything. And then oil and gas and commodities. I operate in a world of alternative assets. And whoever operates in that world, it's quite a challenge to make traditional investors understand the growth that comes with alternative assets. Firstly, what the hell is alternative assets and how you make money out of it. So that's been a huge challenge, especially try explaining somebody who's got hundreds of millions parked in real estate, what the hell food security is and how you're going to make money out of it.
Got it.
So that seems to still be a challenge. Now, in terms of investor preferences, it is changing. Is it changing quite rapidly and largely the way we would want it? Probably the answer is no. It is a slow change, but it's optimistic. As far as government grants and institutional help is available, which is non-equity based, I don't think that too many programs in this part of the world in comparison with the West, especially Australia, New Zealand, even Europe. Like I work very, very closely with something called the European Investment Fund, which is a part of the European Investment Bank in Luxembourg. And we floated a lot of grant programs for entrepreneurs that are in the area of United Nations SDGs, the 17 of them, right? There is emergence of that happening on an institutional and a government level in Dubai. So if you were to kind of reach out to the Dubai Green Fund or the Dubai District Fund, or let's talk about Abu Dhabi, various programs that Mubadala is kind of running right now, which are very SDG focused. So I'll give you a real case example. Which is as relevant as it could be. In 2021, I started, building a women entrepreneur-based incubator, and I was making the rounds of Abu Dhabi and Dubai, trying to understand that if I could get a grant from the government or partner with the government to start it. Finally, I landed up PCOM, so it's incubated under In5, and that's the reason I was meeting Noor a lot, media, and you've seen me in your offices. So, we've built that. We've been completely funded by the Dubai government. We started with a community of 5 entrepreneurs, and now we've got about 700 women across the region that become a part of this incubator, and we take them through that whole life cycle of how to incubate a business, how to raise capital, and all the necessary knowledge, right? So this is completely funded by In5, which is a grant from PCOM. So yes, there are areas where you can access equity-free support to be able to take your business to the next level. But that kind of support, Samir, is available on very, very early stages. It's kind of like giving a toffee to a child saying, okay, be happy, we are with you. It's not serious capital coming your way that helps you get your business to a level that is impressive. So it's early days, but I'm sure these grants programs are going to kind of evolve more.
Evolve. Okay. Walid, coming back to you, the Africa story continues, and you're also seeing in Africa a lot of corporates and turning their investments into startups. So you have some interesting stories out there, and specifically to these corporate mindsets. Why in Africa it's shifting? and they're investing into kind of things like venture studios or running their own corporate venture programs and things like that. So maybe a little bit insight from that would help.
Yeah. I'll connect from where Amit has left the point, which is
Sure.
very, very important point. There are several grants, especially in East Africa, with IGAD and COMISA and USAID and a lot from Nordic as well. German also, they're doing a lot of stuff. The German investment programs for Africa and others. But again, in Africa, apart from the big four, like Egypt, Nigeria, South Africa, and Kenya, you do not have the ecosystem, cycle completed. You do not have a Series C or Series D or exits, So that type of ecosystem is not being deployed yet. So here, as Amit said, you use these grants, to have a sort of angel build product, pre-MVP, stuff like that, which is significantly low, unless like the other Tanzanian lady you've been talking about that's gone through several programs and then managed to get through. But we need to pave the way forward by creating this ecosystem. So I think now, if we look at models, with USAID, the venture builder program, $75 million, this open the floor, for a more consistent ecosystems in terms of the stage of funding. So here, for example, give grants, it's okay and all, but also fund venture builders and try to create, a both Series A sort of ecosystem, because we do co-invest with others, like MEVB and others down here. But again, the mandate requires specific KPIs. So if you do not hit those KPIs, it's very hard to look at those stuff. So who's going to build down the road, up to a homegrown startups that are groomed or vetted for Series A or Series B? Another way forward is like, okay, try to hit like Y Combinators or City Stars or stuff like that. And some of them, they have money. But if we look at doing this right down the line, it requires this sort of aggregation, grants, funds as well. Okay, funds, venture builders, co-investment, Dubai or UAE and Africa. In terms of the question, particularly regarding corporate innovation and a couple of other stuff. For example, we have a couple of cases in East Africa where they are corporate in a financial institution, which has SACCOs. Like some of the financial institutions, they have like 5,000 farmer association. Every association has like 2,000 farmers. So you're talking about a pool of 10 million farmers from one institution only. Okay, they want to do corporate innovation. They want to solve for those farmers' problems, and they want to get those homegrown innovative founders to do that stuff. But again, their playbooks are not there. The structure, the whole thing. They could put a nice place, get 50 or 100 interns, put an entrepreneurship presence program. But I think more mature programs, like Founder Institute program or other similar program could really help into showing them the standard structure, because they do have the client base, they do have the talent pool and the intention. But
they can create a larger impact too, because the 10 million farmers is huge, right? So
it's huge. It's a country by its own, and this is only one institution like that. So going backwards, during those days of I360 Accelerator and Turnit in 2011, 2012, we've seen the same thing happen in Dubai, it's like, okay, DB World, corporate innovation, then it started, and the whole story. But it has managed to put its footprint in the ecosystem as general,
Yeah. Media, this is more, I'm a founder too, and this is more towards my heart, which goes to the founders every day. How do they build relationships with institutional VCs, or what are the first steps? What should they do to kind of get in front of you?
There are many ways, of course, personal presence in events or or some connections based on helping each other or helping even some volunteering engagements could create a connection. Now, we source from a lot of different places. We have people on the ground that are scouting. We go to accelerator programs. We go to events. We meet a lot of founders and that are relevant sometimes, or maybe not yet, for the fund that we are investing in that moment in time. So ideally, the connection happens at a certain point in a stronger way than just a cold email, because we receive hundreds of them every day, and it's even just difficult. We are, again, a team of 20 people. It's difficult to go through all of them. So there needs to be a little bit more work in terms of getting the first connection. And then I would say, don't spare the opportunity pitching a company that is not relevant or an idea that has not been tested at all. I would say even an informal coffee, we all enjoy meeting founders. It's incredible, energetic to see all these amazing ideas. And we love to help, even if we don't invest, either through the C3 accelerators that now are part of Global Ventures, or just at a personal level. But I will say, don't take those conversations as normal chit chats. It's always the investors are always, with their antennas very well working, and so every single impression you give, it's important. We love to see, of course, passionate people that show some level of grit and resilience in their life, and then we love to have relevance, to see relevance with our investment thesis at that point in time. So do a little bit of homework before you talk to any investor, so that you get relevant in their eyes. And then, even if it's not the right moment, so if at that point the investor is not investing in that sector, or it's an earlier stage or whatever, make sure you keep the connection going. We really enjoy to see founders that send us updates, good, bad, or they ask for some help, or they ask for some feedback time to time. It's important to keep that link. And then, yes, be yourself. And we love to see, true, genuine interest in the space, and consistency in terms of what is said 2 years ago versus what is happening now. We love that kind of founders. So it's never a casual set of interaction. Don't mistake friendliness with the lack of interest for what's going on in your company.
Yeah, sometimes everybody here calls, hey, this person, name dropping is too much, right, here in our region. So everybody is a friend of a friend.
100%.
Isn't it, Derek? And one of the things, I don't know what kind of startups you get, but do you also ask when they register on your platform whether they have raised money from friends and family, or have they completed a round, or have, like bootstrapping, how much they have bootstrapped, to what extent they have bootstrapped, and because I think getting onto a platform like N2 is a no-brainer. Anybody can register and kind of seek funding. But what are some of your important qualification criteria in order to seek funding from your investors?
Okay. It's a big round circle going back to some of the things that were mentioned earlier. Just to say that the founders that come onto the platform, most of our partners are accelerators, incubators, studios, other venture funds who are going to the next series. They're sort of finding co-investors. They need to support those companies. So most of the qualification comes from there.
From them.
And we don't get into the qualification side.
Okay.
And literally that is because once we've made that a relevant connection, it very much falls into the lap of the personal side of stuff. You can sit across from 10 fintech founders. They're all literally doing the same thing with a little twist of lemon. And one investor will go, that's the girl for me, and another one will go, that's the guy for me. But they're all kind of doing the same, raising the same, have the same sort of traction. And that after that relevance point is really where it's the human connection that counts. And that's really what we see and what we're trying to do. In terms of can I touch on a couple of points here, because there were some really interesting ones made.
Okay, okay. We just have about 14 minutes to go, so let's do that.
I promise I'll only be 13.
Yeah. Just kidding. Yeah.
No, just on that side where we're talking about, the ecosystem here, I think there's a couple of great things here, and however tough it might be right now, what's being built here is fantastic. They have proved themselves, the UAE in particular has proved that it can be the epicenter of anything it puts its mind to. With the divergence that we're seeing on a macroeconomic level between the East and the West, they are perfectly positioned. Coming from Europe and having much of my family and friends there, the level of energy is very low. I mean, they'll all talk a good story, but in fact, anyone that wants to come here is going to come here, and we're seeing that influx of talent, and we're seeing that influx of cash coming here. And that cash is ready available to stay here, but also invest here and go outwards. In terms of what we're seeing with institutions and government, I hear that story an awful lot. Governments should support us more. They should do more, and give us founders some money. We need some money. You've got to realize that this is a zero tax regime, or it's 9% of corporate, zero. Okay, when you're in the UK or in Europe as an angel investor, that beginning capital that comes in, okay, my option, having money when I was in Switzerland or in the UK, was, do I give it to the tax man, or do I take a punt on Jill or Bob? Well, I'm obviously going to take a punt every single day of my life, because I don't want to give it to the tax man. It's a no-brainer. We don't have that mentality here. If I have 100 in the bank, it's my 100. I don't owe it to anyone. So now my level of investment risk taking has changed significantly. So we don't have that underlying amount of money here in the same way that we have it in other places. Now, sorry, I'll go to another level. We don't have sequential financing here. No one's really worked it out. That's pretty much because we're a startup in a startup, right? It's a startup. Dubai, the UAE is a startup ecosystem.
In a startup.
In a startup. So what do we have? We have a bit of a, and this is not disrespectful because it has to be done, but to attract everybody, we have a bit of fake it till you make it. We have a lot of big numbers going on. We have a lot of screaming and shouting, which attracts people here. But in order to make that work and to happen and build a proper ecosystem, we've got to understand, not copy. We need to understand what those other successful ecosystems look like.
Have done.
Israel, for example, small country, highly educated. How do they get that follow on? There is no Series B, there is no Series C. What do they have to do? They have to prove in their very small country that they can get traction, that they can build great, and then they're out to Europe and the US. We have to kind of do the same thing, and we have got that access. We've proved it from this country in every single direction that we have.
Both Africa, Southeast Asia, everywhere, India, right?
Absolutely.
So it's a huge.
And that's where that sequential financing has to come in. More corporates here have to start investing in the likes of global ventures. They have to start investing because global ventures can pick out the 20, 30 startup founders that can fit into something that corporate wants. But what we tend to see is there's no follow-on after that. There might be some corporate money going in. What happens in other ecosystems that make it work is you achieve traction. I'm invested as an LP at seed. When it gets to Series B, I become a customer. Now I'm on the balance sheet giving a startup real money because they've got a product that I can use. Once that happens, you have a real startup, and all the customers start coming because it was XYZ huge corporate that put the flag up and went, I've just written a 50 million contract with this startup, they're amazing. And that's how that sequential financing can start working. And we need to help educate those corporates rather than running another program. It's all well and good. And, a lot of people can make a bit of money, but there's a lot of great venture capitalists here that can also do that identification, help and learn and teach to build those entrepreneurs into relevant, sustainable businesses as well. So that's a long shot.
Yeah, you did. Yeah, I mean, there is a lot of time for, I think there is to build the ecosystem. I think all of us getting offline and kind of doing real work to help the ecosystem grow is what is needed. Obviously, these online sessions help educate the masses, but really the real work happens through our actions, right? Amit, your stories are different. You look at companies who really work on impact. These founders have to prove that, like Waleed was mentioning, 10 million farmers, they should have at least 500,000 or 1 million farmers on their books in some way, or they're creating for that addressable market. Like, what is the kind of criteria, or how do you filter founders coming to you? What is it that, how do you help build that relationship with you?
Well, I mean, to start with, Samir, I don't do things that, quintessential VCs do. So no, I don't invest in companies that have customers. I invest in IP. So, so what we typically do is we become, innovation providers to medium to large scale industries in the impact domain. So typically what we would do is fund a technology that's coming out of a lab that's got possibly a patent, utility or design, and we believe that it could solve one of the 3 areas that we are trying to kind of push. And then we kind of bootstrap it, help them develop a model that can be licensed, and then introduce that technology to a corporate. For example, if we are working with a dairy technology out of New Zealand, which obviously is world's leading country in dairy technologies, we would take that technology, give it to an Al Marai or Al Rawabi in this region, and if the solution works, there's typically an acquisition in play. So we actually work behind the scenes in only and only investing in IP, food science, and cutting edge tech. For example, we've been doing projects on financial inclusion with Indonesian governments, where we would look at a fintech platform that could help the central bank reach the diaspora and audiences like farmers and cooperatives and artisans in smaller cities that are not on digital platforms, and help them integrate on the digital platform through financial inclusion, where they can avail loans, they can avail all the services the banks have to offer. So we would, kind of identify a technology like that, put money in it, help them build it, and then kind of introduce it to the banks and other private and government banks. And there's, in 9 out of 10 cases, an acquisition in play. So that's what we really do. In terms of the point of relationship, let's specifically talk about the Middle East, right? I mean, I think founders, beyond identifying the right investor for themselves, where they have to do a bit of research, what does the investor invest really in, and what are the interest areas in, which I think is quite generic. But I think something what I feel is lacking in this region, because there's so many expats, all of us are expats, is the understanding of the inherent culture. He or she is an investor later on. First thing, they belong from here. They have a certain way of thinking, which is very different from Europeans and Americans, or Kiwis or Aussies. So understanding that culture and how to navigate that relationship is very, very important for you to land capital deals. Out here, people love to date for a long time before they marry. I mean, and this is a reality.
Yes, that's why I agree.
Somebody who's raised close to $1 billion. So I think, that inherent understanding in people who are coming from all over the world and founding companies out here and reaching out to investors for capital have to understand the culture in this region and navigate that with that understanding, and I think they'll get much more bang for their buck than they generally do.
Okay, brilliant. Waleed, coming to you, what's the, I think we're kind of 4 or 5 minutes away. Let's kind of move to some of the closing statements. 1 or 2 sentences. Post funding, you receive the funding from the VC or from an impact investor or a platform. What do you do next? 1 or 2 suggestions on how to deploy that funding for a founder.
Yeah, I'll just connect to 2 points that Amit said. The first one regarding, I think the strategy we're following, and their strategy is very, very much aligned, regardless of the geographic. Understanding of culture is very important. I spent my first 16 years in Africa. I spent 5 years in India, and the rest I spent it in Dubai here, more than almost closer to 30 years. So again, when we talk to people who are coming recently to the region here, there are a lot of factors that you need to look at when you go to Africa. There's a lot of factors to look at. I think this is very important into understanding the magnitude of the challenge and how the founders they are trying to solve it. In terms of, I think founders and the way they are looking to deploy the fund. I think in emerging market where we operate a lot, they need a lot of support in terms of the ecosystem. They need to look for investors first who can go beyond the money. And when is the last time the investor recommended for you a client, or he put you with a corporate to do a BOC, or you know he advise you to talk to somebody to deploy your design, PCB design or whatever. Those are small things that will make a lot of difference. Because let's see, if this investor put you on a deal with a corporate, as Derek said, that deal might be much more significant than the whole round that you have raised from these investors in terms of 10, or in terms of also the brand equity you are building for your startup. So I think this is important. But again, when we talk to many founders here, we figure out that even the amount they are raising, it is not tallying with their burn rate and the next milestone and the KPIs they're doing. You might raise too much that it will be harder for you to raise the other one. So always we advise them, what is the next milestone? How many months you anticipate to reach this milestone, and then what is your burn rate? Add 30% above the time multiplied by the burn rate, and then go for it. Make a reasonable milestone and raise another one. These are education. Many of the founders we don't see they're aware of.
Got it. And so Media, we're really running short. So maybe one or two quick sentences to kind of close out. How do you want, they've raised money from you. What are your suggestions once the check is in the bank, or once the money comes into the bank? As an investor, what are your suggestions?
I think focusing.
Sorry, Waleed.
Sorry. Go Media.
It was with Media. Sorry, Waleed,
well, for some reason we always overlap.
I think it froze for a while. Yeah,
it's okay. I mean, in 1 minute it's very difficult to be thorough on that, but for sure you got the funding with a certain plan in mind, and you got the investor excited about it. I would say it's important that you walk the talk and you try to achieve what you have promised. Of course, with a level of flexibility, because markets change, you might need to pivot a few times. And so I would say it's also very important to communicate regularly with your investor and bring them in whenever you need a B2B connections, whenever you need additional funding early on. It's always good to work in a partnership. At least at Global Ventures, we really partner with our founders, and sometimes we feel like we're part of the team or something. It's very important to keep everybody updated on every single opportunity or challenge, and we love to help founders in particular on their fundraising rounds, as well as their expansion. That's why we're there. Now, it's important also to be humble, because having raised some funding doesn't prove yet that you are successful. We always focus on how much funding is raised by a startup or by the ecosystem, but in reality, the hard part comes after the funding. And so execution is super important. Being lean and frugal is also important. Doing more with less capital is very appreciated, in particular these days. And so I would say staying humble and and walking the talk. It's what we look for in the post-investment and also, frankly, communication. Regular communication, bringing up issues early on, if any, and also opportunities that we can help expand and support.
Great. We really have, we are at 7, but I just want to complete the cycle so that Derek, and then we'll go to Amit and kind of complete the cycle. Derek, your thoughts quickly, please.
Yeah, I mean, we've spoken about all those sort of external points
Yeah,
of capital.
most of
but I
that,
think the most important one that we haven't spoken about, and what we all set out to do, is the easiest place to go and get capital if you have a great product is from your customers. So, you know, concentrate on that. There's a huge pool of those customers out there. You don't have to do a song and a dance for it. I'm doing my business a disservice, but I really believe that that is where you should be looking first. That'll set everything else up.
Absolutely. Yeah, and sales is like key, right? You get the capital and you actually raise the capital for enhancing your sales and your team. So better build it that way. Amit.
Yeah, I'm just going to leave it with a statement or a metaphor.
Yeah.
You know, raising capital is an obligation, not a prize. So stop celebrating it and get on to work.
Lovely. I really thank you very much. Excellent metaphor. Waleed, Media, Derek and Amit, pleasure having you on the panel today. Sorry, due to time constraint, we only have so much we can share. But I'm more than happy to welcome you all to join the AirMeet link, which I'm pasting it again. If you have time, 30 minutes, feel free. Some of the founders will join on the call. They will ask some questions. So we'll switch from here to AirMeet. So thank you very much. You have a good evening. See you all there on AirMeet.
Great to meet you all. Thank you so much.
Thank you. Cheers. Thank you.
Bye.
Bye.